Well, for more on the markets, we're joined now by Peter Esho from Esho Research. Peter, good morning to you.
Good morning.
It doesn't seem like this developing story out of the States with the FBI reopening their investigation into Clinton emails had much impact on the market trading there today.
It actually came right at the end of the trading session, and the market was higher and it fluctuated by a fair bit, and it squared off towards the end of the session as we saw those numbers. But I think the real question here is what emerges over the weekend. And either way, whether something comes out of it or not, I think it's really going to weigh on the election, on the political process, and what that does, more importantly for markets. Markets can be confusing, in a normal environment, yet alone something like this. Everyone's expecting the Federal Reserve in the United States to increase interest rates in December. And I think what this does is really puts that into question. And what happens at the Federal Reserve in the United States has an impact on all markets right around the world. So this will be huge. If it persists over the weekend, it's definitely going to weigh on markets next week.
Yeah, those seem to be the two key issues weighing on the markets. Will they raise interest rates, and what's going to happen with the election? And of course, they're both interrelated. And the thinking seems to be that Janet Yellen from the Fed Reserve should have pulled the trigger a little earlier than now.
Well, in hindsight, they haven't left themselves much room. They've been saying rates will rise sometime this year for the whole year. And what's happened throughout the year is the market's been pushing it out a month further until the end of the year. If they don't move in December, it's going to cause a lot of issues in markets because it's basically been almost factored in. Anywhere between 60 to 90% certainty that the Fed will raise. And the Fed needs to raise because interest rates are at historically low levels in the United States, very close to zero. And to normalize your economy, you need to make adjustments to interest rates. There are other impacts everywhere else from having low interest rates. The Reserve Bank, for example, in Australia, cannot move as much when the US interest rate is very, very low. That has an impact on our housing market, has an impact on many other things.
So if the US does indeed raise rates when the Fed next meets, the impact here?
The impact here is the Reserve Bank has a little bit more room to move. They can start looking at our own rates. They can maybe increase rates slightly or stop cutting rates and not have to worry about the currency, the impact that has on the overall economy. When you talk about the Australian dollar, it's the Australian dollar relative to the US dollar. And what happens in the US dictates what happens here. So every central bank around the world is waiting for the US Federal Reserve to move. And now that this political issue has come out, if it washes over the weekend, I think the market will brush it off next week. But it doesn't look like it. I'm no political expert, but just the way that it's come out, the way it's been absorbed, the way it's being reported so close to an election, it's going to weigh, as your previous guest said, on the overall process.
And Peter, domestically, do you feel as though the interest rate cycle here is at an end and perhaps the next move may well be up sometime next year?
Absolutely. I completely agree with that. I think interest rates in Australia have been cut. The inflation data that came out during the week shows that the economy is travelling well and there's no longer a risk to inflation falling too low. So the Reserve Bank now has some comfort. The Reserve Bank is sitting in a position where it's not panicking anymore. Things have stabilised, commodity prices are starting to pick up. That's very, very important for Australia. And I do think that next year the Reserve Bank will want to increase rates. But what happens in the United States will dictate at what pace and at what timing and how much movement can occur. So I definitely think rates are going up.
You just touched on their commodity prices starting to improve and energy prices. What's behind that?
They've fallen so much. They've been absolutely annihilated. You have a look at the way the oil price has fallen, or iron ore or thermal coal. They fell to levels that were basically below the cost price for a lot of producers. And energy is not a discretionary commodity. Gold, you don't have to buy gold. You can live without hoarding gold. But energy, there are countries in our region and right around the world that cannot function without energy sources. And so the market has reacted. The market has reacted to those low prices. Production has ceased. Supply has stopped, and the market's now self-correcting. And that's very good news for Australia because over the past 10 years, we've been increasing our energy exports. What's coming out of Queensland, what's coming out of Western Australia in those remote areas, that was all meant to be ramping up. and then prices fell. Now prices have stabilised.